MarketAlpha includes powerful gap tools to help you spot meaningful gap ups and gap downs between yesterday's regular close and the next regular session open. And more importantly, whether that gap is clearing key support or resistance. Because gaps depend on the current session, the most useful metric changes during the day. In pre-market, focus on change pre-market. It measures the percentage change between the latest pre-market price and the prior regular close. Think of it as a preview of the likely gap because the gap becomes official the moment the regular session opens. Once the market opens, switch to gap from last close. That compares the actual opening price to the previous day's close. So it's the true gap for the day. Both metrics can show a special icon. Because MarketAlpha doesn't just detect gaps. It also checks whether the open will be above yesterday's resistance or below yesterday's support. A green icon means the gap is opening above the previous day's resistance. For example, SGML closed at 12.22, which was below the trend line at 12.43, and below the Fibonacci level at 12.29. If it gaps open today around 12.35, it will be trading above both of these resistance levels. When you see a red icon, it means the gap is opening below the previous day's support, such as for QQQ. QQQ closed at 609.65, above its Fibonacci support area, roughly at 608.3. If it gets down and opens around 607.27, it will be opening below that support area. Here's why those icons matter. In MarketAlpha, any indicator you display on the chart can contribute to support and resistance from moving averages, AV-WAPs, to Fibonacci levels and trend lines. So the gap over support resistance logic is based on your structural map that you can track on the chart. Another high signal metric is gap over previous day's high or below previous day's low. This flags the strongest gaps that leave a void in the price action. For these situations, you can see exactly how many percentage points price opened above the prior high or below the prior low. For example, NVO displays 6.16% for this metric, which means it may gap up over previous high by that value. This metric also includes icons for screw gaps when the gap contradicts the prior day's candle direction. For example, HIMS closed green, but today it may open below the previous day's low. That's a bearish screw gap. On the bullish side, GLDG closed with a bearish candle, and today may open strongly above the previous day's high, creating a bullish screw gap. Now let's reset the filters. If you want more context, MarketAlpha also tracks gaps across prior days. Open the column sidebar, go to Gaps, and add historical gap metrics to analyze multi-day gap behavior and follow through. To scan quickly, use the community filter groups for ready-made gap filters such as gap over resistance, gap over previous highs, screw gaps, gap and go styles, and more. No manual logic required. For complete tradable templates, use the strategy filter groups, which combine gap conditions with quality filters like liquidity, risk-award, and path to target. You can also use AI-driven screener profiles that find favorable gap patterns paired with strong risk-reward and low resistance. So you're not just finding gaps, you're finding clean setups. And gaps work top-down too. In the group screener, add and sort gap columns, or apply gap filters. Then drill into the companies to find any gap movers such as tickers gapping up over resistance. And you can see exactly which companies are making the moves inside any specific industry or theme.